It's another week of doing business. Good morning and welcome to Business Morning. Thank you for joining us. I'm Chimeze Obi Iwagu. Let's kick off with the global oil market update as crude prices skidded this Monday morning under pressure from expectations of higher supplies and weakening demand. Brent crude futures fell 58 cents to $81.59 a barrel. U.S. West Texas Intermediate crude lost 58 cents to $80.21 a barrel. Both markets have dropped for the last 3 weeks, hit by a strengthening dollar and speculation that President Joe Biden's administration might release oil from the U.S. Strategic Petroleum Reserve to cool prices. Meanwhile, the Organization of the Petroleum Exporting Countries last week cut its world oil demand forecast for the fourth quarter by 330,000 barrels per day from last month's forecast as high energy prices hampered economic recovery from the COVID-19 pandemic. And back here, the inflation number for the month of October is expected to be released today by the National Bureau of Statistics. In the meantime, the headline inflation figure is expected to drop further to 16.31%, down from 16.63% recorded in September amid rising commodity prices. The latest forecast made by economic advisory firm Financial Derivatives Company, which would mark the 8th consecutive month decline, is attributed to the base year effects. FDC explains that a continued moderation in the official inflation rate will embolden the Central Bank's Monetary Policy Committee to maintain status quo at its upcoming and final meeting for the year on November the 22nd and the 23rd. Meanwhile, the National Bureau of Statistics is expected, of course, to release this inflation number today. And last week, the Federal Executive Council approved what it called the 2021-2025 National Development Plan. The plan, with an investment size of 348.7 trillion naira, will be funded by the federal, state government, and the private sector. The plan was also structured on 5 pillars: economic growth and development, infrastructure, public administration, human capital development, social and regional development. To take a critical look at this move by the federal government is the Chief Executive Officer, Center for the Promotion of Private Enterprise, and the former Director General of the Lagos Chamber of Commerce and Industry, Dr. Muda Yusuf. He joins us in a moment. Keep it here with us. This is Business Morning. Right, joining me now to look at the new National Development Plan by the federal government is the former Director General, Lagos Chamber of Commerce and Industry, Dr. Muda Yusuf. Thank you very much, Dr. Yusuf, for joining us.
Thank you. My pleasure.
Well, looking at this new development plan, it seems a lot is being expected from the private sector. From an investment size of about 348.7 trillion naira, the private sector is expected to provide about 298.3 trillion. What do you make of this high expectation from the private sector?
Yeah, thank you very much. I think it's a reflection of, first, the structure of the economy itself. It's also an acknowledgement of the very important role that the private sector plays in this economy. I think that is what is reflected in this. But again, if you look at practically all sectors of the economy, they are being driven by the private sector. If you take manufacturing, take agriculture, take the services sector, distributive trade, the aviation sector, practically all sectors. Even the social sector that is supposed to be largely dominated by government is now being largely even driven by the private sector. For instance, education. The private sector is playing a very big role now in education, especially in the southern parts of the country. The private sector is playing a very big role in health. These are typical sectors where you expect the public sector to be dominant, but the private sector is playing a major role. Even in the area of security. I mean, you can see the number of security firms, agencies that you have around, you know. So the private sector is practically driving all the critical aspects of this economy.
So what then is the role of the government? Because looking at this provision, the public sector, that's the federal and the state government, is just bringing in a paltry 14.3%.
Well, that's not to diminish the role of the public sector. Because even for me, I believe that the expectation from the public sector going by this plan is also too conservative. Because even in the advanced economies, the public sector is still playing a very big role, especially in infrastructure provision. I mean, see what is happening in the United States, where we are talking about over $1 trillion proposed investment in infrastructure. The same thing is happening in China and all of that. So I'm also not too comfortable with a projection of less than 15% in terms of investment over the next 5 years coming from governments. Not just only the federal, we are talking about the federal,
and the
states, and local governments. I think it should be more than that. Because the government has a major role to play. I know the private sector can do a lot in the infrastructure space, but the private sector cannot provide all infrastructure. If United States, that is the #1 market economy in the world, is investing, I'm talking of the government now, investing so much in infrastructure, talk less of a developing country like ours. So the government needs to step up a lot more. And we are seeing this kind of structure because of the structure of government fiscal operations. If you look at the structure of budgets year in, year out, whether it is federal, whether it is state, whether it is local government, practically everything is on recurrent. Many cases, 80% recurrent, 20% capital. We cannot sustain that through this kind of plan. We need to scale up government investment, especially in infrastructure, because the private sector cannot provide all infrastructure, especially in this type of economy. So it has to be a combination of both private and public sector investment, especially in the infrastructure area.
Right. So now looking at the strategies that the government intends to use to actually achieve some of the plans is to broaden the tax base. I mean, you talked about the role the private sector plays in the whole economic structure. Now the question is, who are to be taxed? The same private sector that is supposed to support this infrastructure development?
Yeah, I think the Minister of Finance made this point clearly. She clarified it. And she said that the idea is not to increase the tax rate. The idea is to ensure that you have a broader base for taxation, which means that you have a lot more investment, you create a lot more incentives for investors and investments to grow and all of that. I think that is what the government has in mind when the government is talking about, increasing the tax revenue and broadening the tax base. Because already, I must say that the private sector is almost overtaxed, particularly those who are in the tax net. The pressure on them is quite enormous, and I'm worried even at the unfolding scenario where all the agencies of government and all of them are now being mandated to go and generate revenue. That could put a lot more pressure on the private sector, particularly those that are already paying the tax. And if you look at their percentage compared to the totality of the operators in the economy, it's quite small. Because this economy is almost 50% informal. So this burden of tax is largely on those who are in the formal sector. And you have a situation where in some sectors, the informal sector also competes rigorously with those who are in the formal sector, which is not a fair competition, because the informal sector is largely untaxed because of the structure of operation and the way the tax policy is also configured. It's putting a whole lot of pressure on those who are in the formal sector. So I think the thinking behind this statement, which the government said in this plan, is to ensure that we have a lot more investment. We grow the investment, therefore the tax base will also be broadened.
Yeah,
I think that is the context.
Perhaps the finance minister also talked about incentives. For you, what kind of incentives would you like to see?
Well, she talked about incentives, and this is not the first time we are hearing about incentives. But when it comes to the reality of it, we really don't see much. Even some of the tax incentives and tax waivers that were given in time past, everything is now being rolled back now. because government is, very bullish in terms of revenue. But when we talk about incentives, we should be looking more at creating an environment that will inspire confidence. That is very basic. Because, again, this is about ensuring continuity. Because when we don't have continuity in the policy space, it's a major issue. So the confidence building process is perhaps even much more critical. Now, take all these plans now. In the last 25 years, we have had the Vision 2010, which was a fantastic document. When the Obasanjo regime came, that was set aside. Then we had the National Economic Empowerment Development Strategy, which was, I think it was Professor Charles Soludo, who was the chief economic advisor at the time.
Yes.
That was what Obasanjo put in place. After Obasanjo, we had the 7-point agenda by late Yar'Adua. After that, we had the transformation agenda by President Jonathan. Now we are talking about, we already had the Economic Recovery and Growth Plan, which is lapsing, which is coming to an end this year. Then we are now having this National Development Plan. The point I'm making here is about consistency. Because when you have a long-term horizon in terms of planning, it inspires a lot more confidence. It also enables investors to plan long-term. But when you have a situation where every government is craving for an identity, you want to set aside the previous programs, you set up your own, just to have an identity. That is not, it's not good for us. It's not only happening at the federal level, it's also happening at the state level.
Right, so do you have concerns that perhaps, this administration has barely less than 2 years to go. We're likely going to see this plan thrown aside?
It is likely, given what the history has been with all these plans. Many of each time a government comes, because this idea of seeing the government as a continuum, it has not properly been embedded in the culture of governance. People feel that if you continue what the previous administration has done, it's as if you have not done anything of your own. So in the process, we have so many abandoned projects, programs, and all of that, which is not good for the economy. So for the state governments, for the federal government, and even the local governments, and even our first ladies, because you have seen each of them, each time they come, they abandon what the former first ladies have been doing and come up with their own.
Absolutely.
And whereas some of them have very, very good programs, which others succeeding first ladies normally should build on. We have seen a lot of things around women, around children, around rural women, and so on. So the issue of continuity and the concerns around seeing government as a continuum is very important. And talking about even other things that the private sector would like to see, the macroeconomic environment is very important. Because sometimes these things are even more important than the so-called incentives. When you have a macroeconomic environment that is not stable, that is very unstable, it doesn't encourage long-term investments. It creates a situation where many investors that come around are people who are looking short-term. Again, that is not good for the economy. Macroeconomic variables like the foreign exchange, you know what the issues has been in the last couple of months around depreciation, volatility, unpredictability, and all of that. The inflationary pressure and the galloping inflation. We're expecting the new inflation figure later today. You can see the level at which inflation is, even though it has been decelerating. But inflation at over 16% is also not a good thing for investment. Then you have issues of policy consistency. Because there is no harmonization. Now you have a plan. The whole idea of a plan is that every aspect or every component or every segment of the government should key into that plan. But what we see in reality is that you have the plan, but everybody is moving in different directions.
Yeah.
There is this territorial mentality among many of the agencies of government.
Okay. Now, that brings us to the issue of the business environment, which, of course, when we talk about quality of business environment, it's, say, it's very critical, you know, in accelerating economic growth. And I know that recently your center released its business environment update that was for October. Now, looking at this plan, is there a nexus between this?
There is a nexus. Because if the plan is expecting the private sector to invest over 85% of what the total investment should be, then we have to create the environment for the private sector. Because what we have seen over time is that investors are not duly respected in this environment. They are not the kind of courtesy that you should extend to investors. To appreciate the fact that they are contributing so much and they are expected to contribute so much, it's not existent. So there has to be a lot that we need to do around creating the enabling environment. It has become so that one doesn't sound like a broken record. This enabling environment issue is still with us. Even though we have a lot of rhetoric about creating an enabling environment, in reality, nothing much is happening. I mean, look at what is happening now, for instance, with the foreign exchange. Don't say that I'm flogging it a lot more. Because
but that's the major issue,
it is a major issue. And it cuts across all sectors of the economy and all levels of business. The business environment have not had it good at all. I'm not talking about even the cost of the dollar. I'm talking about the stability of the system. I'm talking about the liquidity in the system. There are global variables that has affected the forex, but there are also policy issues that are also contributing to the problem. So that is a major issue in terms of what we find in the global update. I mean the business environment update. Then of course we have the issues with our ports. Again, that has been a recurring problem. The issues of congestion, the issue of the gridlock, and more importantly, the issues of dispute resolution in the international trade process. It's a big issue for investors in this economy, which needs to be urgently addressed. Dispute resolution between the importers or investors and the customs, between the investors and the shipping companies, between the investors and the terminal operators, between the investors and the regulatory agencies like NAFDAC, SON, and all of that. We don't have a credible dispute resolution system. You need that kind of thing to be able to inspire confidence of investors so that the investors are not left completely at the mercy of these agencies. Because that is what is happening. Then we are now having issue with high energy costs. Of course, it's good to celebrate high oil price, but again, it's hitting investors in terms of high cost of diesel, high cost of aviation fuel, high cost of kerosene. You know, these are some of the things that we worry about as far as this. Then, of course, the tax rules. We had a discussion around this. We cannot have a situation where you have a dispute with the tax authorities and you are expected to go and pay 50% of the amount in disputes.
Dr. Yusuf, just hold your thoughts there because in all of this that you have talked about, we would also want to know the kind of proactive role, you know, the private sector can play in ensuring, you know, the realization of this. Let it not just be the government. Just hold your thoughts there. We'll take a break. Okay. We'll take a break. I'll move it back with this conversation in a moment. Welcome back. If you've just joined us, you're watching Business Morning on Channels Television, and we've been discussing the new National Development Plan by the federal government, and I still have here with me Dr. Muda Yusuf. Thank you very much, Dr. Yusuf, for sticking by. Just a quick one before I let you run off there. looking at this plan, what are the risks there? And of course, we are talking so much about private sector role. What kind of proactive role would you want to see, or can the private sector actually play to ensure the realization of this plan?
We're talking about risks. First, risk of sustainability, which we already discussed. Succeeding administration should see this plan as something that they should run with, and we should see government as a continuum that should apply to all levels of government. Secondly, there is also the risk of resource availability. If you have very serious limitations in terms of resources, it could pose a risk to the outcomes of the plan. Third is the capacity to implement. We have very serious capacity issues in government, particularly in the bureaucracy. So that could also pose a risk. I think basically those are the things that one could regard as risks to the implementation of this plan. And in terms of what the private sector can do, I think first, the private sector is ever ready to continue to invest because the opportunities in this environment is huge. What the private sector is craving for is the right environment to continue to invest. Secondly, is for the private sector to also be responsible corporate citizens. Compliance with tax regulation, with all the regulations that can ensure that we have a very sane and stable economic environment. I think these are some of the responsibilities.
All right. Thank you very much, Dr. Yusuf.
Thank you very much.
Thank you. Well, Dr. Yusuf is the Chief Executive Officer, Center for the Promotion of Private Enterprise, and of course, the former Director General of the Lagos Chamber of Commerce and Industry. Okay, the Senate last week approved about a $16 billion and €1 billion loans request by President Muhammadu Buhari. What is the implication of this for the new development plan, and what does this mean for Nigeria's debt profile? Mustafa Wahab, analyst with Chapel Hill Durham, joins us now. Good morning, Mr. Wahab. Thank you very much for joining us on the program.
Thank you very much, Chimeze. Always, great to be with you.
Always happy to have you. Well, Nigeria's 5-year economic plan has been disclosed by the government. What hit you right in the face? Was the government now plans to raise about $16 billion and, of course, 1 billion euros. Does this come as a surprise to you?
I mean, not necessarily. I'm not necessarily surprised, to be honest, right? I mean, Chimeze, we all crave for massive, economic growth in the country, massive infrastructure development, talk about education, talk about health, this sort of, development that we crave in Nigeria, they are things that, require massive amount of money, for this investment to be put in place. Hence the reason why, it becomes imperative for the government to sort of, fund this massive development, with borrowings, right? Given the fact that, revenue-wise, we're still, lagging behind. I've said it many times that, compared to, the size of Nigeria's economy, I think what we generate in revenue is still not, sufficient enough to take us, to the dreamland. I mean, I checked recently, South African government was able to generate over $84 billion, in tax revenues in 2020. That compares to, the overall federally collected revenue in Nigeria of roughly less than, $13, billion, which obviously shows that, we still have a long way to go as far as revenue is concerned, right? But for us to get to that, huge economic development landmark, it then becomes imperative for us to sort of start borrowing to take us to the dreamland, right? Again, I believe that many Nigerians, many experts, and market participants with it now generally agree that borrowing is not really a problem, right? As long as you are using the cash from the borrowing judiciously. Again, I mean, if you compare, if you look at going by history in Nigeria, history of borrowings in Nigeria, where we've not seen, tangible economic impact for the huge amount of borrowings that we've done in the last couple of years, it just sort of begs the question of why, any Nigerian will be happy with what is currently happening as far as borrowing is concerned. But I mean, theoretically, it's not really a big deal that a country would embark, on massive borrowing, as long as most of those borrowing would pay itself via infrastructure investments.
One of the debts we received, we particularly noticed how the federal government seems to favor borrowing from China. For instance, $5.1 billion will come from China Exim Bank, $3.9 billion from the Industrial Commerce Bank of China, and $2.8 billion from China Development Bank. Should we be worried?
Absolutely. I mean, we all should be worried, Chimeze. I mean, if you check the current debt profile for Nigeria, I mean, what you see is that at least 10% of our borrowing is clearly from China, whether via the Exim Bank or China Development Bank, right? I mean, we're already largely exposed, to the Chinese government, and I suspect that this is not really a problem of Nigeria alone. I think across, low-income generating or low-income countries of the world, you've seen that we're now a lot more countries are now becoming a lot more exposed, to Chinese borrowing, right? I think I saw a report recently that close to $400 billion is now being owned to China across emerging and frontier markets of the world. Hence, a lot of analysts over the world are now, becoming a lot more concerned regarding these rising loans, and especially, this exposure to China. I mean, I think these massive loans that a lot of countries are now being exposed to China would more or less make it easier, for the Chinese government to start seizing assets in the event of, anyone not being able to pay back their loan, right? I don't know why. I don't know why FGN is favoring, loan from China. I suspect that it's more or less because of the fact that, they are more or less trying to lean towards, concessionary borrowing, rather than commercially priced, Eurobond, where, obviously the service cost will be a lot higher compared to what they will get for development banks, right? I suspect that's the reason why they are leaning towards, more loans from China, because of, implication on costs, right? But again, we're now becoming a lot more exposed. Currently, we are 10%, of our total foreign loan to China. Again, if we add this 16 billion, to what we currently have, that would probably take us to anywhere between 15 to 20%, which it should be worrisome for any meaningful Nigerian.
So how sustainable do you think our debt profile is right now?
So, I mean, we've seen the Q2 number as far as Devt service cost is concerned, right? And what we saw was that debt to revenue ratio is now down to less than 50%, compared to 80% that we saw in Q1, right? And this is not to say that things are a lot better as far as, external debt or overall debt in Nigeria is concerned. I suspect this, significant reduction in debt to revenue ratio is basically because of, seasonality factor, right? So once we start to see, debt service costs, coming in, especially from the €4 billion bond that we just did, and obviously close to $3 billion from the IMF, SDR, right? I suspect that the debt to revenue ratio would probably go back up to the north of 70 to %, levels, right? Again, I mean, we're still worried. Debt to service debt to revenue ratio is significantly high up there. At 70%, it means that for every ₦1, Nigerian government generates at least 70% of that will go into debt service, which basically leaves, minimal room for us to, invest massively in the infrastructure that we so crave, right? Again, like I said earlier, the problem of Nigeria is not really debt service. I think the problem is really, revenue generation, right? If we can expand, tax base, devise other means of, generating revenue, I suspect the number, mathematical wise would gradually, come in, by naturally.
Right. Now, from investment perspective, what are your key takeaways from the new development plan of the federal government?
Yeah, I mean, so I think the plan is amazing, right? It's a fantastic plan, and I think going by history, we've had series of amazing plans in Nigeria. Think about Vision 2020, think about ERGP that is going to be ending this year, right? I think I mean, I listened to the good part of what, you know, Dr. Yusuf was discussing. And one of the key things that hits me right in the face was when he was discussing, you know, how unsustainable, you know, inconsistent Nigeria's, you know, development plan has been over the last few years. I mean, this is a fantastic plan. I mean, so far, what we've seen, right? Again, in the next, you know, 2 years, Buhari's administration would come to an end. A new government will probably come in and, you know, start up their own plan, which obviously, you know, would be pointing towards exactly what, you know, Dr. Yusuf was worried about, right? I mean, we are sitting on the private sector part of you know, the discussion, and one of the key things I've seen, I mean, throughout my experience, is that when foreign guys are coming down to Nigeria, one of the first key things that they ask us is show us the developmental plan. So based on that, they can form their long-term investment objective, right? But the key problem is that they've not been able to do so in the last couple of years because, again, when you push out plans, fantastic plans, first of all, implementation would be a problem, and second of all, if another, you know, administration come on board, you know, they more or less relegate, you know, those plans and bring their own, right? But in defense of the Buhari's administration, one of the key things I see from this new developmental plan is that it's actually, you know, feeding off from the ERGP that's going to be, you know, ending in 2021. That's again basically address the issue of, you know, consistency as far as policy wise is concerned. But generally, I mean, it's a fantastic plan. It's a plan that is going to be driven by the private sector. Obviously, we know that private sector has a lot of roles to play as far as, you know, Nigeria's economic development is concerned, right? I mean, I think one of the key numbers that we know right now is that for us to get to the dreamland as far as infrastructure investment is concerned, I think we need close to $3 trillion, you know, for infrastructure development. I think agency of the government have actually quoted this number in the last couple of years. Again, $3 trillion is a huge amount of money that obviously the government alone cannot fund. Hence the reason why it becomes imperative, you know, for them to start partnering with the private sector for us to get, you know, to the dreamland as far as an economic development is concerned. But generally, it's a fantastic plan. I mean, we like the content, and obviously would be looking forward to seeing how, you know, implementation is going to be running over the next couple of years.
All right, thank you very much, Mr. Mustafa Wahab, for your time this morning. We do appreciate it.
You're welcome, ma'am.
Okay, let's do our opening call to the market, and we have Anita there. Hey, Anita. Well, let's get started with the activities at the FX market last week.
Yes, good morning, Chimi. Well, in the third trading week of November, of course, we do not know how the market is going to start, but let's give you a review of how all the markets performed last week. It was quite a mixed bag there for the Forex market, where we had the total value there, the total value of transactions was down by 11.91%, almost 12%. But of course, when you take a look at the individual performance there at the FX spot market, it jumped by 24.76%. Forwards market, there it had the highest increase there, 32.14%. But the futures side of the Forex market was down by more than 97%. Of course, we were still awaiting maybe an inflow of dollars from, you know, the SDR, as well as oil prices. Of course, that should have an effect on that market. But of course, we will be looking at, our analysts will tell us what to expect in the coming week, but that will be till tomorrow. But before that, let's take a look at the fixed income market. Okay, the NAFEX rates, there you have it unchanged. The fixed income market, it had a slightly bearish performance there. Not much of activity. Number of deals there, 8. Then at the treasury bills market, it was bullish. We had number of deals, 11 there. For the open market operations, it was not much of activity there. The OMO bills there fell by 7.70%, while the CBN's special bills fell by 11.01%. But now let's flip over to the very popular market. That's what I call it, the very popular market, the equities market. It went up by, in terms of value, more than 646 billion naira. And that, of course, came in as a result of the gains that we had on Monday and on Tuesday last week, where the likes of Airtel, Africa and MTN Nigeria drove the market into positive territory. It was quite a surge. The market was propelled into the 43,000 points, almost nearing the 44,000 points. So, of course, that's what we had, 2.95%. So really still a massive gain for last week. Of course, just tells you that that market, investors are taking advantage of, you know, some earnings as well as latest information to carry out, you know, their activity there. Of course, you'd have an exit and an entry. It's a free market. Then, of course, when we take a look at the sectoral performance, it wasn't too good. Profit taking affected 4 out of the 5 key counters of the market, which excludes the premium board where the likes of MTN Nigeria and Airtel are listed. Now, to give us, you know, an expectation or what to expect at the markets, at the equities market this week, let's talk to David Adorin, who is a stockbroker at Highcap Securities Limited. Thank you for joining us, David.
Thank you. It's always a pleasure being with you.
Pleasure is mine too. Now,
okay.
Of course.
Thank you. Now, you know, last week, the equities market was essentially propelled by the rally on Airtel Africa and MTN due to the price-sensitive information that was released in respect of those two companies. So they took the market over the first 2 days of the week, but unfortunately they fizzled out moving towards the end of the week, probably because a lot of investors saw exit opportunity, especially in MTN, so that they can exit at the secondary market and then move to the primary market where MTN is doing a public issue. Now, for this week, it's not likely that there will be any price-sensitive information that will hit the market except from yet to be released third quarter results, which may not be significant. So I see the equities market moving around a narrow band on the horizontal line, you know, during the week.
Okay, so now on Wednesday, of course, this is a side switch from the equities market. But on Wednesday, or let's talk about today, we're expecting the latest inflation figure. That's the inflation figure for the month of October to hit the market, to be released by the National Bureau of Statistics. Do you see this having any impact on investor sentiment? Because now you talked about, you know, some earnings results which are yet to be released and which will not have any impact on the market. Now, do you see this having any impact on equities, on the equities market?
Yes, it's possible that if the figure released by NBS will remarkably reduce the inflation rate, then of course there will be a reaction in the market, and that is capable of driving the market upwards. But there is already a trend of a declining state of the inflation rate. So if the decline is as expected and is not unusual, it's not likely that there will be any reaction. So we'll just see a market that will likely be flat during the week.
Okay, so thank you, David, for that analysis, and we will keep our eyes open for how the market turns out in the start of the third trading week of November. That was David Adorin.
Thank you.
Okay, thank you. That was David Adorin, a stockbroker at Highcap Securities Limited. So now let's take a look at this. Is how the activity was. The deals was in the red, but the volume and value was in the green. If we move over to the smaller unlisted securities market, it was up by 1.57%. This was the value. As well, that margin is still reflected here, 625.55 billion naira. And then in terms of the volume was a little bit down in contrast to the previous week. And then the value, 25.82 million naira in 47 deals. But let me just tell you what exactly we will be expecting this week. Today, we'll be expecting the inflation numbers. Then, of course, there will be an inflow of OMO maturities this week, which is expected to have an effect on the market. About 103.80 billion worth of inflow is expected from the from open market operations this week. And then, of course, we expect that the debt management office will be conducting, will be offering 150 billion worth of bonds in 3 tranches this week at 50 billion each.
Okay, I guess we'll look forward to all of these data expectations and, of course, the trading for today. Thank you very much, Anyeti.
It's a pleasure.
We take another quick break, and when we come back, we do an opening call to London. So stay with us. All right, let's see how the week has started off out there in London. We have Juliana. Hey, Juliana, good morning. Well, more than 300,000 workers in the UK will get a pay rise from today as the charity behind the voluntary real living wage raises the minimum hourly rate amid growing fears over a squeeze on household incomes this winter. Are we likely to see the government raise minimum wage as a result of this?
Good morning, Chimeze. Well, a short answer to that question is no, unfortunately. We saw that the Chancellor, Rishi Sunak, during his autumn budget did raise the minimum wage. Well, it'll be risen in April for anybody over the age of 23 to £8.91 per hour. Of course, this has fierce criticism, which is why the Living Wage Foundation, which is a charity that monitors just basically how people are living. There have been lots of concerns that millions of people up and down the UK are working long hours but are still struggling to pay the bills, pay the rent and put food on the table, which is why the charity decided to raise their benchmark this morning. It's going to be raised by 40 pence per hour if you are working outside of the London, and that's been raised to £9.90. If you're living in London, of course, it's much more expensive living here in the capital. It's going to be raised by 20 pence to £11.05 pence. Now, there are about, I believe, 3,000 employers across the UK that voluntarily adopt any changes that the Living Wage Foundation makes. So yes, as you're right in saying, about 300,000 people are going to be receiving a pay rise. We hope, because of course there has been a pandemic, so many businesses have been struggling, but you know, inflation is very high, fuel duty is very high, people are really struggling. There are no minced words about how bitter the next couple of months are going to be for people living in the UK. So I think this announcement this morning is going to come to much relief for many people.
I see. Well, it's a new business week. How have the markets opened up this morning, and how's the rest of the week looking like?
It is a new business week. Lots of disappointment from COP26. The final draft resolution clearly has been seen as not doing enough. I think that sentiment has dripped into the square mile because the FTSE all shares opened up in negative territory this week. Later today, there is going to be a historic virtual meeting between Xi Jinping, the China president, and US President Joe Biden. Lots of, you know, wait and see sentiment coming out of that meeting. And then, of course, closer to home, we've got a lot of economic data coming up. Most importantly is the CPI. So we're going to be looking at inflation currently standing at 3.1%, much higher than the threshold put in place by the Bank of England at 2%. There are some suggestions, Chimmy, by economists that it could be as high as 3.9%. Then later in the week, we're going to be having a look at retail sales data. For about 5 consecutive months, retail sales have been falling here in the UK. It picked up after the end of lockdown at the beginning of the year, but it seems to have dipped over the summer, and it's been continuing that way. And retailers are hoping desperately that they can rake back some of the lost earnings that they've had over the past couple of years. So yes, lots of economic data to look forward to, but so far we're in negative territory.
Quite a lot to chew this week. Anyway, we expect more update from you later in the day.
Thank you, Chima.
Okay, let's look at the crypto market. Well, Ladi, it's I know your market doesn't sleep,
oh, yes.
but this is the start of a new business week. So What's the sentiment out there?
Well, over the weekend, the sentiment was quite mixed. We saw Bitcoin did fall to that 63K, almost 62,000 level, and it brought most of the altcoins, the top altcoins, are down by about 9% over the weekend. So it wasn't really a great weekend. But today, it's quite green in the market. And looking at the Fear Greed Index, we have greed this morning at 72 points. Remember, the Fear Greed Index can be used for your trading expectations. You know, when the market is greedy, that's when you should be looking at exiting at some point when it gets to extreme greed. And fear is where some traders like to buy most of their assets. So it's greed this morning. Market cap, we have $2.87 trillion. It's up about 1.23%. The volume traded in Bitcoin this morning is down 7.53% for the total crypto market, that is. Bitcoin dominance, 43.27% this morning. Price of Bitcoin, $65,741. Did get that bounce from the 62K level over the weekend. It's up by 1.29%. Volume is not so high this morning, about $25.68 billion traded in Bitcoin. Ethereum, they're looking quite strong, trying to break that 5K level there, $4,700, up by 1.18%. Volume traded in Ethereum, $13.47 billion traded this morning. And the top odds by market cap are looking quite green. We have XRP there, the biggest gainer there, up 2.09%. It's $1.22. BNB also having that recovery. It did get above the 666 range, but now trading at $652 this morning. And Cardano, $2.06. Cardano has been stuck around this $2 range for a while now. A lot of traders are waiting for that major breakout from Cardano, but Cardano has had an incredible year. Was trading below the $1 range for a while, but now we have it at $2 there. Solana, $241, up 1.91%. And we have the top 5 gainers there. We have Wax there, one of the blockchain projects. Projects doing really well this morning, 44%. Let's bring in Olumide Adesina now, financial market analyst. Great to have you, Olumide. Good morning.
Yeah, good morning, Ladi. Yeah, it's a great Monday.
Good morning and happy Green Monday. Well, I see Bitcoin had the highest upgrade called the Taproots over the weekend. What's this upgrade about, and how's it going to impact the Bitcoin ecosystem?
Yeah, it's a good positivity around the crypto ecosystem, understanding that Bitcoin plays a major role in, you look at the dominance level and the kind of investors that are attracted to it. So it shows some form of positivity. But I think people need to understand that the Taproot upgrade really gives Bitcoin more functionality and increase the scalability. And also, this is one of the major upgrades in about 4 years. And, you know, some people are a bit skeptic about the fact that this will be successful. But showing the recent success that we came to play yesterday, it gives you instance that we expect more applications to be grown on it. We expect more ecosystem to be built around it. And you need to understand that one of the advantages coins like Ethereum, Solana, and Tezos have over the likes of Bitcoin is the functionality, the smart contract ability. So we're going to see more of that in Bitcoin. And, you know, players like Jack Dorsey and Elon Musk that are lovers of Bitcoin are giving it more upside. So I was surprised to see the price above $65,000 this morning.
Right. And bringing it back here, over the weekend and the past week, we saw some circulars from the CBN about some P2P traders having their accounts actually frozen. What's going on with that?
Yeah, you need to understand that one of the things the CBN observed in the past couple of months is that despite the crypto trading ban restricting its financial ecosystem from the crypto market, there has been significant gain in P2P across board. And if you look at in the past 10 months, for example, P2P grew by over 55%. And that tells you that people are really going towards that platform. And, you know, basically P2P doesn't really involve
direct transactions with banks. So what people do is that they use financial transactions for third party, and the Apex Bank felt the need to hammer hit hard. So the banks are really looking at checking how these transactions are being carried. So people that have suspicious high volumes at certain age categorically are being restricted. But to be fair, the bank, the CBN did not give any banks the rules on how to carry out their methods. But I feel the banks are personalized how to track this transaction. And surprisingly, I could tell you that it's really working, because if you look at on a week-to-week basis, P2P on useful tools, a data that tracks Bitcoin P2P trading has fallen by 40%. That's the first time I'm seeing that since tracking Bitcoin P2P transaction, telling you that Nigerians have become worried about the clampdown. So we are seeing the fact that despite the fact that the court has some granted bill or reversed some of the CBN restriction, the banks are still adamant, because under the CBN Act, the bank is mandated to ensure financial stability, and they see the crypto market disrupting the ecosystem. Take into account that if you look at recent earnings from banks, especially the big players like GT and Zenith, we see interest income plummeting, telling you that the ecosystem around our financial entities come out plummeting, because we are seeing so many young Nigerians going to the crypto market, understanding that about 70% of Nigerians fall in the category between 0 and 54. So that tells you that the CBN is really taking these things very seriously, Ladi.
All right, Olumide, thank you so much. We'll keep tracking that space to see how it all ends. Thank you, Olumide, for that report there. All right, top five gainers there. We have KuCoin shares up there about 7%. So, Chimi, is not looking bad in the market this morning.
I see, but coming from that conversation you had with Olumide, I would have loved to hear how the central bank is also doing with its e-Naira.
Yeah, true. Yeah, we'll find out maybe tomorrow. I'll get some insight on how the downloads are going. I heard it got downloaded about 500 and something times the past week. That's the e-Naira wallet. So it's not looking bad.
You know, get the details of the transactions there as well. All right, thank you very much, Lali. Well, that's a wrap on the program for today. Thank you for watching, and don't forget to join us later this afternoon on Business Incorporated. That's by 1:30 for more updates on developments in the world of business. I'm Chimeze Obi Iwagu.